Eric, I want to ask you about hedging in this current environment, because that was a key topic of conversation throughout the day today here at CNBC. Looking at what the market did today, what would you recommend investors do to protect their portfolios at this point in time?
Well, I think at this point in time, we actually think we're going to see a sharp rally from here over the course of the next month. And we saw part of it that today. We've been negative for the last 6-7 weeks since the S&P was around 4,700, and today we actually pivoted and turned tactically bullish. And so I think for those that are looking to put hedges on, I would be waiting for higher prices, because you're probably going to get a situation where right now vol is still very pumped up, and I think you're going to be able to put on reset hedges and put on hedges at higher prices and lower volatility levels. The market seeing the event around Russia and Ukraine is now sort of behind us. And although there's a lot more to play out, we now have the answer around what the invasion is going to look like, what the sanctions are going to look like. And I think the actual impact on the global economy is actually going to be not that material over time. And so I think this will become something that the market is going to sort of look past over the course of the next week.
That's going to be interesting, especially given that we do have a Powell testimony in the next week. And I wonder whether you think he's going to argue that this does complicate accommodation removal, or maybe exacerbates inflationary or stagflationary pressures. Does the street have a directional bet on that?
So right now, the market is pricing in just over 25 bips for March. My view is that it's going to be 25 bips, and that when he does testify, he's going to allude to that. And I think prior to the Ukraine-Russia situation, I would have told you that was likely the case. I think this just adds more sort of fuel to him really wanting to be more methodical and thinking that there's no reason to go 50 bips. There's a CPI report the following week, which will clearly be very, very important. But before that, I think the takeaway from his testimony is that we're going to be going 25, and he's going to be methodical. And although if anything, this situation does cause sort of more inflation on the margin, I think it'll really be a negligible long-term effect on inflation. And by the way, my view on inflation is that it's going to remain very high for the entire year, and over the course of the year, it's going to be a problem. But I think talking about right here, right now, this incremental piece of information, it's not going to change the Fed's outlook that much right now.